Welcome to the Wealthologist Weekly, brought to you by Hobart Wealth. We are a boutique firm for wealth management and financial planning, and I'm your host, Chris Hobart. And in today's episode, we're going to dive into the fascinating world of cryptocurrencies. Now, I'm pretty sure I heard some cheering and maybe some booing when I mentioned that word. So let's talk about cryptocurrencies because they've definitely shaken up the financial landscape by offering really a whole new asset class with some pretty unique characteristics compared to traditional investments like stocks and bonds and even mutual funds. And they've really begun to capture the attention of more and more retail investors as well, seeking maybe higher returns, but also opening up some different financial markets, really in some unprecedented ways. And whenever we hear that, we've got to be careful and really have a good understanding of what we're doing. So I want to start by exploring the benefits of investing in cryptocurrencies. And first off, there's always that allure of high return potential, especially a couple of years ago when they were going through the roof. They've been known to skyrocket in value, offering huge profits to those who time their trades just right. But of course, there's also the folks that we hear about that with those great rewards comes some great risk. And they're very notorious for their volatility as well. Now, another perk of cryptocurrencies is what's called market accessibility. Unlike traditional stock markets, a crypto market, it operates around the clock, which gives investors the freedom to trade anytime, anywhere, just haphazardly. Plus, cryptocurrencies can add a layer of diversification to an investment portfolio, which could reduce a certain type of risk by spreading it across different asset classes. Of course, it might increase other forms of risk as well. But here's the thing. As with anything, it's not just about the potential for gains. Investing in cryptocurrencies also means that you're backing blockchain technology, which that's really a game changer in terms of transparency and security and efficiency across various industries. And I don't want you to forget the social impact aspect of cryptocurrencies as well, as cryptocurrencies offer financial services to populations without access to traditional bankings. In fact, there's some countries that have gotten rid of their currency and replaced it with cryptocurrencies. But it's essential to weigh these different benefits against the risks, rewards versus risks. Cryptocurrencies volatility, they can lead to huge losses. And the regulatory landscape, it's still pretty uncertain. So you've got security risk, market manipulation, as well as limited historical data. All of these add to the complexity of investing in this specific place. Now, let's talk a little bit about the various ways that you may own cryptocurrencies and maybe some of their advantages or disadvantages. Now, you can opt for what's called a direct purchase and ownership, which gives you full control over your assets without any sort of intermediaries. Or you could consider like a cryptocurrency fund, like an ETF or like a mutual fund for diversified exposure across different crypto assets. Those are all considerations. Now, if you're more of a tech savvy person out there, cryptocurrency mining offers a way to earn coins by validating transactions. Now, there's some pretty big upfront investment and technical expertise required to do this. But for those looking for a passive approach, you might not want to do that, but you could do what's called staking, which allows you to earn additional coins by simply holding and supporting the network. So a lot of moving pieces and parts in this. The reality is each method comes with its own set of pros and cons, from the potential rewards of direct ownership and mining to the reduced risk of like a cryptocurrency fund that might be a little bit more diversified. No matter what you look at, the risk of cryptocurrencies is real. So to conclude, as we look at that, diving into that world of cryptocurrency investing, it can be thrilling, but it can also be pretty darn risky. So I'm going to caution you, and I'm going to tell you, remember only to invest in what you can afford to lose in something like this, and consider holding onto your assets through the ups and downs. And the volatility is going to be real with something like cryptocurrency. Because while cryptocurrency success stories are built on long-term holding strategies rather than short-term trading, it's also very, very fun to kind of see those big bump ups in value, but that's not always the way that it goes. So that's going to wrap up our episode on cryptocurrencies for the Wealthologist Weekly. Again, I'm Chris Hobart, and I'm just want to remind you, stay informed, stay cautious, and as always, stay wealthy. See you next time.